I find myself in a very peculiar position. I'm kind of in defending Jerome Powell, which I never thought I would do in my life. Kerry, for the life of me, I don't understand what the administration, who I support, is thinking when they say they want to fire Powell and cut interest rates to 1%. Now, the
Yeah.
current Fed funds rate is for 4.25 to 4.5. So it's just so we know.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Michael Pento is on vacation, although as long as Michael has a phone, he's never really on vacation. In fact, he manages hundreds of millions of dollars, not with computers, but with his iPhone, if you could believe it. That's how easy he's got the job down to, right, Michael?
Yeah, I'm in beautiful Belmar, New Jersey, in the upstairs apartment of a close friend. And I forgot we were doing this interview, but I'm here. I'm here
Hey,
with my athletic freak shirt on, and I'm ready to go. So,
you know what Woody Allen said, 90% of life is showing up, right?
well, I'm going to show up at the pickleball courts in maybe about a half an hour. So let's see what happens.
All right, I'll say a prayer for you because everybody that I know, except for one or two people, has sustained fairly significant injuries from a very low impact, low effort sport with jarring lateral movements, sudden stops, running backwards.
Yeah.
Like, I don't know how you do it,
So
but hopefully,
so just to digress for a second, I had a pretty significant concussion from doing a Frankenstein walk backwards and supine on my head. And then I popped a calf muscle, and now I'm nursing a broken tendon in my foot, as
oh
well as
my,
a couple of displaced bones.
well,
Pickleball is very safe. I suggest everybody do it. Just put a helmet on.
yeah. I think it's about as safe as the Bright Line train. You know, just talking a little Florida biz, I wrote an article about this. The Bright Line is unsafe at any speed. We thought there were only 126 deaths Bright Line related since 2017, but the Miami Herald just came out with an expose. It's actually 186 deaths. So they've been covering it up. But I'm not so much worried about the carnage on the tracks in Florida. I'm worried about the carnage on the tracks coming out of Wall and Broad Street, right?
Yeah, and the Eccles building at the Federal Reserve.
Yeah. So what's going on here with the Federal Reserve? It seems like they got some pretty luxurious digs there. Central banking is good business, isn't it?
I find myself in a very peculiar position. I'm kind of in defending Jerome Powell, which I never thought I would do in my life. Kerry, for the life of me, I don't understand what the administration, who I support, is thinking when they say they want to fire Powell and cut interest rates to 1%. Now, the current
Yeah.
Fed funds rate is for 4.25 to 4.5. So it's just so we know. We're talking about 1%, which is a
Mhm.
325 basis point rate cut immediately.
Yeah.
I guess inflation that has wiped out the middle class isn't good enough. When you have 60% of Americans that have a net worth of $1,000 or less, 60,
Mhm.
60, what are we doing here? Do we want to make home prices go up even faster and make them even more
Maybe.
expensive? I don't understand it. So on what premise would you cut interest rates? Let's say the unemployment rate is I think it's 4.1 or 4.2% is historically very, very, very low. The stock market is at an all-time record high valuation. Home price to income ratios are at an all-time high. Credit spreads are
Mhm.
extremely tight. Financial conditions are extremely loose. We're not in a recession. GDP growth for this quarter is supposed to be about a little bit over 2%. And inflation, Carry, has been
Mhm.
above the Fed's asinine 2% target for 50 months.
Right.
Now, if I just told you if you just heard that, if you came from Mars and said, all right, I understand the Federal Reserve's
Hmm.
charter is to maintain, a level prices, stable prices. And I just told you all those things. And I also said that the Fed has missed its target to the north, its 2% target to the north for 50 months, and that target is moving further away. In other words, the inflation rate is moving further away from the target of
Hmm.
2. what do you think the conversation would be? It wouldn't be when are you going to cut rates. It certainly shouldn't be when you're going to lower rates to 1%. It's going to be when you're going to raise interest rates.
Yeah. Well, and really historically, going back, as far back as you can go, really the rates are not out of line. They're kind of normalized now. If we
Right.
need 0% interest to keep this economy going, then we've got a real problem here, don't we?
No, we not if we have a real problem. We have a tremendous credit bubble. We have an unbelievable equity bubble. 200
Yeah.
and well, the total market cap of equities is now 212% of GDP. So
Hmm.
it's more than double the size of the entire US economy. Now, the normal relationship there is around 90 to 100%. That's just normal. So that means
Right.
stock prices could drop 50% and still be above valuation, historical valuations. That's how crazy. And then you also have, the CAPE ratio, which is at, I think it's at almost, is it 27 or 37? I forgot what it was. Anyway, it's
Hmm.
astronomically high, historically speaking. Price
Yeah.
to sales ratio is 3.
Hmm.
Um, so risk premiums are negative. In
Right.
risk premium, the inverse of the PE ratio, right?
Sure.
Gives you your earnings yield. And the earnings yield is less than what you can earn in a T bill. This is all highly unusual, record low dividend yields. So the stock market's in an epic bubble. Home prices are the most expensive they've ever been in history, even in relation to incomes. And we have a massive credit bubble when there's like, trillions of dollars of things like private credit, which hardly ever existed before. I mean, in the previous decades. Now there's a whole
Right.
cottage industry of businesses that can't get loans from a bank or float corporate paper, so they get loans from, the shadow banking system.
Yeah.
That's a huge problem. That's a huge problem. When not if when we have a recession, because the business
Yeah.
cycle hasn't been repealed. When we have the
You sure
next
about
recession,
that?
when we have the next
Sure.
credit crisis or recession, this is when reality is going to hit. So it's not if, it's when. I have a timing model that lets me know when to get out. I've been, I have a long short strategy, so I'm mostly long, sometimes short. In the
Hmm.
past few years, mostly we're now long, but holding our nose because we know that if you're going to be one of those people on those automatic buy and hold, dollar cost averaging, funding their 401k in a target date fund, and you're going to be
Right.
down 35% in a few weeks time, not a few weeks from now, but in a few weeks, a truncated period of time, when the poop hits the bed,
Hmm.
we're going to be down 30% in a very quick period of time. And then you're going to panic and call your administrator for your 401k plan and say, move my plan into cash. And that's when the
Right.
stock market goes down 50, 60, 70%.
But haven't people been programmed to not behave that way?
They have been inculcated through the decades to just buy and hold. But Kerry,
Mhm.
stock ownership among Americans has never been higher. And the stock ownership is concentrated mostly in people who are my age or older. So
Sure.
you're talking
Our
about
age.
in their 50s, late 50s, early 60s, or in their retirement ages, not in the 20-year-olds, not in the meme stock people. It's our age,
Yes.
approaching retirement or in retirement. Kerry, when they're down 35% in their portfolio, I don't know the exact number, but it's probably around, that's my guesstimate. They're going to panic
Existential.
because they cannot see. Then it becomes what you just said. It's an existential crisis. I am not going to be. Their wife is going to tell them. No, probably being a little sexist here, but if you're a man, your wife's going to tell you, "Hey, I'm not canceling my trip to Europe, and I'm not selling my lake house. You're
Right.
going to sell. You're going to sell, and you're going to sell now, and we'll wait for it to settle down. That is going to happen, and that is going to be synergistic. It's going to be a death spiral, in my opinion. It's just a matter of mean reversion. If you believe in,
Human nature, right?
nature hates vacuums. This is a listen. This is one or two things are going to happen. Mathematically certain. Either stock prices are going to crash so the ratio, the numerator matches the
Right.
denominator, or they're going to stay where they are for a decade, not do anything until the denominator catches up. Now, the latter scenario never happens in history. It just never has happened before. Bubbles burst; they don't just stay bubblicious for a
Mhm.
decade.
Wow. All right. So, ah, so you got to think, what should you be doing now? Because this appears, from what you're saying here, Michael, to be inevitable.
Well, you better first of all, if you're in one of those buy and hold dollar cost averaging rubrics, you got to get the hell out of there as fast as possible. You got to put
Hmm.
yourself with an active money manager. It doesn't have to be me. I mean, let me speak altruistically. Find somebody else besides me. I have plenty of money and I have plenty of money under management. I don't care.
Hmm.
But find yourself a robust model that is in the purview of a very honest and experienced money manager. It does not have to be me, but do it for your own retirement sake. You need to do it.
All right. So,
You've worked your entire life to get where you are. Realize where you are. Realize the triumvirate of bubbles that we have, unprecedented in history, all three of them.
yeah.
And be a historian. See what has happened not only in the United States but around the world. What
Right.
happens to asset prices when they get this elevated? And the inculcation,
Hmm.
the mindset is overwhelming. Where you have to now convince people that there is such thing as a business cycle. You have to convince people that the
Hmm.
Fed and the Treasury and the administration can't always bail you out
Yeah.
because in the past, Gary, what does the Treasury and particularly the Fed have done? They've always solved the problem. Every hiccup in the stock market or a speed
Hmm.
bump in the economy, they just lower interest rates and print money. Gary, do it again. Do it one more time and see what happens to inflation. If they
Hmm.
actually start cutting, if they started cutting interest rates now to ZERP, QE, helicopter
Oh,
money, I think you'd see
disaster.
inflation. It would be an absolute disaster. It already is a disaster for this country when you have over 60% of the population with really no or negative net worth. You
That's
can't have a
depressing.
viable nation. So try now pursuing
Hmm.
a policy that bails out Wall Street and screws Main Street. See what happens.
Yeah. It ain't going to be pretty, is it?
No, no,
So, gold, silver. It appears, certainly for silver, we're on the verge of a major breakout, and things are not looking good for those silver shorts, are they?
no. Now I have so I took a nice position in platinum several months ago.
Good
Been
move.
long gold for a very long time too. So my proxy for
Mhm.
the precious metals proxies that I use are gold and platinum.
Right.
But silver too is you very. I'm not going to argue against silver, but you have to get your hands on some of this. And there's a bull market happening in platinum. For decades and
Yeah.
decades on end, platinum was more expensive than gold. It's a rarer,
Totally.
more rare metal. It's a more precious metal. It has some industrial components to it as well. And that has flipped. So I would not only own gold, I would definitely own some platinum here because there's only one thing that's going to happen. There's only one thing that I can
Mhm.
be assured to occur, and that's stagflation like we've never before imagined. We're going to have another recession. Business cycle hasn't been repealed. We're going to have a credit crisis. The playbook is going to be deployed because it's worked
Mhm.
every time in the past. What's the Pavlovian response from the Fed and Treasury? Borrow, print, spend.
Of
But
course.
those automatic stabilizers that kick in are going to send a deficit not to, the deficit was 200 billion prior to the global financial crisis. Then it went to,
Yeah.
the trillions.
Trillions.
Now it's 2 trillion in the party times, man, in the good times with full employment and
Yeah.
record stock market. It's 2 trillion. So when the automatic stabilizers kick in, the unemployment benefits kick in, this deficit is going to go between from 2 to 4 to 6 trillion per annum. So that
Is
means
that
when
it?
4 to 6 trillion, $4 to $6 trillion annual deficit. And that means the money is going to go directly to the people. It's not going to be like it was in the global financial crisis where you just bail out Wall Street by take the banks got their
Right.
assets bailed out from the Fed. No, this is going to go right into the hands of the pockets of the people through the unemployment
Mhm.
insurance that they're going to get
Right.
and through the subsidies that they're going to get from the Fed and the helicopter money coming from the Treasury. So we're going to have inflation not the way they measure it stop at 9. It's going to go to 19.
Yeah.
And that's, if you that's what you have to be prepared for, because if you're saying to yourself, I think I'm going to retire, and 5% on a 30-year Treasury bond sounds pretty good because
Yeah.
inflation's only 3. That's wonderful.
Hmm.
Tell me how you feel about earning 5% when inflation's 19.
Uh, that's an existential problem in and of itself, right?
Gary, core inflation rose to 2.9%. Year over
That's
year
what they're
core
admitting.
inflation. I mean, the morons that speak on mainstream financial media, when the inflation report came out, they're like, oh, better than expected, because the month over month was a little bit better. The core rate of inflation increased. I think the
Yeah.
former reading was 2.7 or 2.6. It jumped to 2.9 core inflation year over year. That's a that is that is a disastrous
Right.
conversation to have. Inflation on the core level is spiking, and I want to have a scenario where I'm firing the central bank so I can put what I would call an obsequious sycophant, a
Yeah.
puppet of the president, to put rates
Uh,
at 1%.
yeah. What could
What do you think is going
possibly
to
go
happen?
wrong
What would
here?
happen to that stuff? What would happen to the housing market? Here's the scenario. The scenario is this: so April 2000 or May 2026 comes. Powell is shoved out the door. An obsequious sycophant, a puppet of the president, comes in. He cuts rates to 1%. And what happens when the long end of the bond market interest rates go ballistic?
Hmm.
I mean, the Fed can control the overnight interbank lending rate, and the money markets will trade in sympathy with that.
Sure.
But unless they assent to buy every single treasury bond issued, like the Bank of Japan does, we're going to have a huge problem with the interest rates. And if they do buy everything, we're going to have a bigger problem with inflation.
Hmm. Yeah. It sounds like we got problems on the way here, huh?
Well, I mean, listen, when you abrogate free markets, when you say the free market doesn't have to function, we could just 1987 just print some money. Greenspan says we'll just print some money. We have a tool, we have a technology. We don't need to. Why would we? Why would we make money
Hmm.
pegged to something like gold? Why would we do that? Well,
Yeah.
because the mine supply of gold is limited, and you have something real and tangible that's backing your currency. But then
Hmm.
they came up with the idea we could just live in fairyland.
Hmm.
And we could just back our currency with nothing. We'll back it with the
Yeah.
taxing authority of the U.S. Treasury and the American military complex. That's what we'll
That
back it
should
with.
work.
Yeah, and then the dollar, crashes. Go look at what the dollar has done since 1913. Its purchasing power, and then
Oh,
these
yeah.
people have the nerve to tell you that they're in charge of protecting the purchasing power of the currency. That's a
Ridiculous.
comedy routine, Kerry. It's a joke.
Yeah. That is a comedy routine. And, it's that old saying, Will Rogers said, every time Congress makes a joke, it becomes a law. And every time they make a law, it's a joke. Right?
Gary, let me just I had this written down. I want to make sure when I talk about credit bubbles, total non-financial US debt as a percentage of GDP is higher today than at the start of the global financial crisis and the start of the Nasdaq crash in 2000. So the
Hmm.
current ratio is 257% of GDP, total non-financial
Wow.
debt. In 2007, before the stocks lost 50% of their value, the S&P, it was 234%. And in 2000, that great recession where the Nasdaq lost 80% of its value, it was 189%. And the current ratio is
Really?
257%.
That's
That's your
amazing.
credit bubble. That's your credit bubble.
Man, so there's no way out of this.
There isn't any easy way out of it. I mean, they're going to try to hyperinflate their way out of it, but since we have an adjustable rate mortgage as our, I know everybody said, hey, Janet Yellen, why don't you, when interest rates were like 0.3 on the 10-year note,
Mhm.
why don't you like float some 30-year debt out there and finance it, or maybe even issue a 50-year bond? I guess there wasn't any appetite for that, but at least they should have really loaded up on that loan. Kerry, if Wall Street's gonna supply you with a 10-year note that's yielding a third of 1%, wouldn't you want to lock in those? That's a pretty good rate, right? Right.
Yeah,
Well, guess what they said?
sounds
No,
like it.
we're just going to do T-bills. We're going to do T-bills and chill. Well, that's now you have to roll over those T-bills every single year,
Yeah,
and that's what you have. So if you really want to know the truth as to why President Trump wants that interest rate artificially suppressed even further lower, is because it would really bring down the interest on the debt
yeah.
with
So
no
that's what it's really
ramification,
about.
no negative ramifications with housing or real estate or the equity market or the
Wow. So it's that simple, huh?
yeah.
So it's all about rates.
It's all about interest on the debt, which is over $1 trillion already.
Yeah. Gotcha.
You see how
Gotcha.
well Doge worked, right? The Doge roared into town, and they really slashed the government, slashed everything down. I mean, we're good now, right? I think they decided to cut $160 billion
Yeah. Well, they're
from
still
our
cutting in theory.
yeah. I don't know what they're cut. Well, Doge has been run out of town faster than the
Yeah.
Federal Reserve has been run out of town, and they should be cutting $1 trillion per. We need to cut $1 trillion per annum to get to that magical Scott Bessent,
Yeah.
3%. But guess what? We decided to cut 160 billion, so we're a little bit short. This is about 840 billion a year,
Just a little.
just a little.
All right. So what about Bitcoin here?
Well, here, well, you opened the Pandora's box here when you talk about Bitcoin. Bitcoin, I actually liked as a concept. I hated
Hmm.
I didn't buy any of it, unfortunately. So I've been wrong about the direction of this thing. But the concept of Bitcoin originally, or cryptocurrencies in general, was, hey, we have a decentralized currency that
Yeah.
nobody knows who you are, and it's outside the purview of government, and
Sounded good.
it protects you against a falling U.S. dollar.
Hmm.
So fast forward a few years, and of course the pimps and the hookers on Wall Street, would they say, "Oh, we fall in love with Bitcoin. We can make some money on this
Yeah.
glorified barcode," which is what it is. It's just Bitcoin. All Bitcoin is, your private key is a bunch of letters and numbers. Okay,
Yeah.
it's a password that's worth $117,000. But okay, let's just talk about this for a second. So it goes from basically nothing to $117,000 per unit, but it got there because it's been bastardized by Wall Street. They've co-opted
Right.
and corrupted it. So now
Totally.
your decentralized coin that you think you own is completely centralized. It can be taken away
Mhm.
from you capriciously by the government because they actually know exactly who you are.
Oh yeah.
Wall,
Definitely.
Wall Street has know your customer rules and anti-money laundering rules.
Yep.
If you own an asset that's pimped by Wall Street, they know exactly
Hmm.
who owns every single one of these Bitcoins. So they can take it from you. So it's no longer, it's decentralized. And then to pour icing on the cake is, or gasoline on the fire, I guess would be a better analogy. They say it's an alternative to the dollar, but now they want to link it to the US dollar and to treasuries by stable coins.
Right.
So the whole concept of this thing has been obliterated.
Hmm.
And they did this so they can pump up the Bitcoin price to $117,000 a unit. Now, let me tell
And
you something.
counting.
There's two more things I want to tell you about this. Number one, it
Yeah.
is not gold. There's an unlimited number of cryptocurrencies that can be created. I do like the blockchain technology.
Yeah.
It's extremely useful. But to think that the blockchain technology is the same thing as a coin that
Hmm.
replaces gold is ridiculous.
Yeah.
Um, so there's 21 million bitcoins, but there's an unlimited number of other currencies that could serve the same purpose. So it's just a commodity.
Right.
Cryptocurrencies are a commodity, and they're limitless in supply, unlike platinum and unlike gold.
Yeah. This is true. I totally agree with you there. But I think there's something else going on with Bitcoin that we're not going to know. I think there's a Bitcoin short squeeze coming because you got a huge synthetic derivatives to market there, and you've only got 7% of all the Bitcoin ever created that actually free trade, which will be substantially less because you got ETFs this week. 2.2 billion more went into Bitcoin ETFs. Where are
Hey,
they getting all these Bitcoin from when
listen,
they stop making it?
yeah, completely wrong on the price, missed the entire thing. This thing can
Hmm.
go much higher, but when you get an unfriendly administration in place, and you will, and an unfriendly SEC, and you will in the future, this thing will crash because its intrinsic value is maybe closer to $1,000 rather than 117,000. So just be aware. I mean, it's just not something at this, especially now at this price level, I'm interested in getting involved with. But hey, been wrong
You know what's
before.
interesting?
I,
I
I
was at I was at the Bitcoin conference, and it's amazing. A guy I know who told me to buy Bitcoin at 5, who's never sold one Bitcoin. He was buying it at $1. And let's not forget, Michael, that if you'd invested 10 cents in Bitcoin in 2010, it'd be worth $119,000 as we're speaking. What he told me is that over half the contributions going to the Republican Party are coming from crypto bros.
my
So
that's
I
my
think we're
point.
safe for now.
Gary, you're exactly right. But 3 years from now, I don't know.
Hmm.
So yeah, play with it now. The volatility uh, attributes to this product are just astronomically off the charts. So it's just not something I like to. That's why I prefer platinum to silver. I don't like
Hmm.
that high beta. Um,
Yeah,
but can
I
you
got.
make money in Bitcoin? Yeah, 100%. Can you still make money? Probably. Did I miss everything? Yes, I did. Um, but
Hmm.
but beware, because when you have something that's supposed to have its value derived from having a decentralized,
Yeah,
anonymous, immutable transaction, and the value is now derived from government. I'm the only person I've ever heard talk about. I mean, maybe I just don't have my ears out there.
yeah.
But who have you ever heard anybody else say how absolutely absurd this is?
Oh, completely. But that doesn't mean you can't make money at it, right?
100%. No, I mea culpa here. I'm the last person to ask about the future to make a Bitcoin price condition. For me to do that, it'd be completely
Hmm.
inappropriate because I've been so wrong on the
It sure
Bitcoin.
is interesting, though, huh?
But caveat emptor here. They will be hell to pay, and it's coming, and it's going to
One
be
day.
much worse because what Bitcoin really is now has become is just a derivative of the stock market. So it's a higher beta derivative on equity liquidity,
Hmm.
and if liquidity ever dries up again, not if, when it happens,
Yeah, when?
it's gonna be a disaster for the entire space.
All right. Well, I think we'll let it go there. We got other things to talk about next time after you're done traveling. Things about the war cycle, what's happening there in Europe, the euro, the dollar, all that good stuff. But you'll find Michael's work, excellent work. Sign up, pentoport.com. Links in the show notes. And if you got a question for Michael, myself, shoot me an email, kl@kerrylutz.com. Michael, we'll talk to you in a month or two. Be well.
Always a pleasure, Kerry. Thank you.